Welcome to Mastering Expanding and Contraction Patterns. In this video we're gonna be focusing on contractions, right? So guys, like I stated in the previous video that I uploaded on the expanding channel, guys, you need to use the website to be able to utilize this information, right? So this practical lesson was designed solely to help back up the theory that is also engaged in our website. So make sure to go through the theory, and by doing so, guys, it will take you straight back to this video. So make sure you do that so that you can have a combination of theory and practical. And the link to my website is in the description. Enjoy. Welcome back, guys. So now we're gonna be covering a contraction, right? So a contraction, like I stated, it is when prices squeeze in. So it's opposite from an expanding channel, right? So, and it's different from, like I stated on the expanding channel, that it is different from a traditional channel whereby you have two identical trends, right? You have two identical trends, either bullish or bearish. So this one it forms a form of triangular pattern. As you can see, we have a triangle pattern right here, right? So this is how it demonstrates itself. So it would first start off with very strong price movements from the downside, back up, coming back down. As you can see, guys, every time prices bounce from our support and resistance area, the prices squeeze in. As you can see, it started off very massive, but as time went on, it became smaller and smaller and smaller, right? So the prices will squeeze until there's no room to play around. That's when we can expect market to break. So as you can see, it'll just squeeze until there's nothing left. Then the market can either break towards the downside, right, or break towards the upside. So in a bullish market, we can expect very strong impulse moves, right? Then the market will play in this contraction right here, and like I said, a contraction is also acting as a consolidation. Then once price breaks, retest on the trend, we can expect pushes towards the upside, right? That's in a bullish market. In a bearish market, it is totally opposite. So we can expect pushes, market to break, come back, retest, and a push towards the downside. So how do we capitalize it? We would have our support zone over here, right? We would have our support zone. Then once market breaks for sales, we would look for entries and we would exit just before the market reaches our support, because at the support we can expect market to respect the support and buy. We buy at the support and we sell at the resistance. So once the market has broken out, let's just do it properly. Once the market breaks out, retests, then we're going for sales, because we, like I said, let's say we had very nice strong impulses, the market will consolidate in a contraction, break, retest, then we'll place our stop loss just above the trend, our top trend, and we'll go for sales. And for buys is exactly the same thing. So we would have our resistance area here. Let's say that our resistance is here. Then after that very nice strong impulse, market will contract, then it will break, retest, and we'll look for our entries going to the upside, right? There we go. This is how we will capitalize on it. Then we'll just have our stop loss below this trend over here, and we would wait out to see how this plays out, right? So let me show you in the market how you can expect to spot one, right? So I already spotted one right here. As you can see, this is a traditional trend. You see, we have two identical trends. We have this trend is very identical to this trend, right? So the market did what? It broke out of the traditional trend and it did a very strong impulse. Then as you can see, price started off big. Let me just do this, man. Let me just do this, push everything down, delete. So the market broke out of our traditional trend, our bullish trend. It broke out, so we're expecting pushes towards the downside. That's what the market did. It created a very strong impulse, also creating our channel, right? So as you can see from the resistance to the support, right, we had very strong market movements from the resistance to the support. But as time goes on, as you can see, it becomes lower and lower. The price movement becomes lower and lower until price breaks, retest. Then we had a strong impulse to the downside. So this is how this strategy works. So basically we could have had our entries here, and we would have exited where? At the support, at this nice support here. You see, exactly like the example that I just showed you guys. It's all about following the rules and understanding how to play the game, and you will be able to effectively trade these setups. So guys, I want you guys to literally, in this situation, we'll just placed it a little bit down, not too much risk, obviously, somewhere there. So I want you guys to go practice spotting out these trends. If you have a problem, go hit me up on my website, on the email. It'll be linked in the description in this YouTube channel, and you can also hit me up on social media. If you need more assistance further than this, you can hit me up and I will attend to your needs, guys. So I'm here to help you guys grow and be able to spot out these patterns. Just let me know if you understood how these patterns work. If you don't, also let me know so that I can break them down with you guys. So this is basically how you trade this. So until next time, guys, peace out.